Hoofda, these insurance rates, lately, they suck. Hey everybody, it's Tristan Emond with Mindful Living Realty, a realtor right here in Rapid City, South Dakota, the gateway to the Black Hills. In today's video, I chat with Brian Blair with Farm Bureau Financial Services here in Rapid City to find out if these insurance rates, if they're ever going to come down anytime soon.
All right, Brian, thank you so much for being here with me today.
Absolutely.
Let's start with just talking a little bit about your family and how long you've been in the Black Hills.
Yeah, so I came out to spearfish for college and never left. So I've been here since the year 2000 and kind of fell in love with the hills. Can't imagine being anywhere else, really.
Right.
Yeah.
How long have you been in insurance? And just talking a little about your insurance agency.
This is my 11th year in the industry and probably our wildest year in the industry.
Right.
But yeah, it's something that I enjoy and have a good team here. And yeah, it's a good time.
Awesome.
Yeah.
Okay, so let's talk about what we're here for. These pesky rates don't seem to be going down.
Nope.
They're crazy. I mean, I think even like 2 years ago, I remember like thinking, well, if you get $1,200 on a normal $300,000 home, you're probably about right. Now
Right.
it seems that's like wild dreams.
That is a wild dream, and the days of $1,200, $1,500 homeowner premiums are, at least right now, those are long gone. A lot of factors, and you can go anywhere and see the increases.
Right.
You can go to McDonald's and order a number 2, and it's $11 now. The dollar menu is not the dollar menu anymore. It's the $3 menu.
Right.
Dollar stores aren't dollar stores anymore. The problem that I think people have with the insurance premiums being what they are is I can't give you anything to hold, touch, smell, taste. You know what I mean? It's a promise is really what you're buying. But yeah, premiums, with record inflation, cost of materials, labor, we don't have a lack of hail in this area,
Yeah.
which definitely drives that.
Okay, I was going to ask about that.
Yeah, and it's I would have to say it's all hail driven. It really is.
For our area anyway.
For our area.
Yeah.
For Western South Dakota. It's fun when we get a new insured moving here from, California or Arizona, and they're like, man, you know what? Like your insurance is really expensive here, and it's like, well, yeah, we get hail, and they go, well, we got hail once in California too, and it's like M&M size hail, and then we pull up some pictures of some of our hail that we get here, and they realize real quick that probably in the next 5 to 10 years we're going to be buying you a new roof and replacing some siding and some gutters, and if not, it's going to happen.
My line to my buyers or people moving into the area especially is like, you're going to replace your roof before that roof ends its life cycle.
Absolutely. I don't know of one person that has been like, oh, our roof's kind of getting old, and they replace it themselves. That just doesn't happen here.
No.
When you look at like COVID, during that COVID season, what you had happening, and if you remember, and I remember the days, it was May 3rd was a bad one, June 4th was a bad one.
We got hit on that June one.
Yep, and it's
Killed.
So something that kind of triggered this market, and maybe you might want to edit this out depending on how many roofers you want to piss off, but a lot of companies, we didn't know the severity of COVID, if you really would possibly kill someone when you got in contact with them. So a lot of companies were doing all of their adjusting from a desk. They weren't sending a human out to assess the damage, right? And so what happens is you have desk adjusters doing the adjusting during a pandemic after a catastrophic hail loss, and then you have some roofing outfits maybe fudging some stats to get a higher payout. And so when you have that, it just leads to a perfect storm. When hail claims go from 10,000 to 15,000 to 30, 40, 50,000,
It's just A plus B equals C. The rates are going to go up because more money's going out, right?
Yep. And a lot of people they're like, well, why did my rates go up? I didn't even have a claim. And it's a pool. It's the rule of large numbers. Like I pay premiums knowing that you might have a claim, and my premium money might go to your roof this year. Next year it might be a different story, and
Because that's how the insurance.
all ships rise at high tide.
Right. Now, does like the big hurricanes and the other things like in other parts of the country, are those driving factors to our insurance rates as well, or is it kind of a natural thing?
For some companies, probably could be. For smaller companies, we're in a handful of states, so what happens in California, Florida, Texas doesn't affect us here, but on a national scale, on your national providers, absolutely. I'm friends with some Florida insurance agents, and they're having a much more difficult time than insurance agents in the other 49 states right now.
I can believe.
Yeah.
I can believe with the whole condo crisis and everything going on over there.
It's insane.
Yes. Yeah.
It's insane. Yep.
Yeah. So what do you think is going to happen here in the next few years? Any relief in sight, or is things just going to be the way they are for a while?
At this point, I would love to say, yes, there's relief coming and rates will come back down. I just don't know. It all depends on the economy,
everything's tied together.
Inflation, it's an election year. There's a lot of things that lead to money over here getting moved because of a decision over here. I can't predict that. I would hope so. I would like to say, yeah, rates are going to come back down, but
nice.
I mean, everything from the used car side, like we're talking about homes. Think about on the car to replace stuff on cars, with all the sensors and chips coming from overseas and supply chain issues and cost of labor for the body shops and all these things. It's created a perfect storm of insanity when it comes to insurance. On the auto side, and just look at what used car prices have done. Used cars are selling for record amounts right now, and it's probably the wildest insurance market that has happened in the last 40 or 50 years. It's the Wild West.
It went crazy.
It is.
Yeah,
it's
just
insane.
like I assume, just like the pricing for all the home materials went up nasty stuff in 2021.
Yep.
So did car materials, especially with the semiconductors or whatever it was that were having trouble getting, all that kind of stuff.
Well, so like I'm friends with a body shop here in town, and things that used to cost, when it was just a simple bumper, it was an easy fix. It probably not even claimable. A couple $100, $1,000, get a new bumper. Well, now it's matching paint, it's hooking up sensors, it's calibrations, it's all these things to go into it. And so now your average fender bender is exponentially higher.
Right.
That cost of insurance is gonna rise to replace it, because the point of insurance is to get you back to where you were, right?
So the replacement cost is the big piece.
Correct.
Yeah.
Correct. If you get hailed out on your home, you don't want to take a depreciated amount to get it fixed, because now you're coming up with money out of pocket. So that replacement cost on all these things, and when those things cost more and more money, the premiums have to keep up to pay for the cost.
Yeah.
Yep.
What is some of the main mistakes you see homeowners make when they're getting new claims in our area, or we're getting new insurance in their area?
I mean, one thing that we really stress to our folks is to call us. Don't pick up the phone and call the 800 number and file a claim. Like, let's get a roofer out there. Let's assess the damage. Let's see what we're working with here before we know if it's worth filing or not. If people would look for impact-resistant shingles on the homes that they're purchasing, that's a pretty nice savings on their insurance. Class 3 and Class 4 impact-resistant shingles, I think almost every company offers some sort of savings with those type of shingles, knowing that when the hail comes through, that home is going to hold up better than the home next to it.
Yeah.
Vinyl siding is kind of a red flag. Yes. And that's that was big in
90s.
Yeah, 90s into the early 2000s. You're not seeing it as much anymore, thank goodness. But the cement fiber, the hardy board stuff, that's what we're kind of looking for.
That's what I've been telling my people is like, hey, I know the vinyl siding is easy, but I'd rather have even a hardboard siding that you paint every 20 years just because it's easier to maintain.
Yep. Age of home is a big one. Someone out here building or having a new home built for them is going to rate better than someone buying a home in Lead or Deadwood that was built in 1890. It's going to rate better knowing that new materials were used. You're less likely to have issues and things like that. Yeah.
Okay. Yep. Let's talk a little bit about net depreciation. What's the right one?
Inflation.
Deductibles.
Yeah.
So let's talk a little bit about deductibles in our area, because I know that you can get a cheaper insurance rate if you have a higher deductible. Is that correct?
Correct. So, and I hate the word cheaper because the coverage is going to be the same, but a less expensive.
Thank you.
You know, all the deductible is it's the amount that the insured's willing to self-insure for, right? So, lower the deductible, higher the premium is how that works. Same with autos. You know, if I quote your vehicle, it's going to be a pretty decent difference from a $500 collision and comp deductible to $1,000 because you're self-insuring for $1,000 versus $500. We're seeing anything from percentage-based deductibles. And for someone that maybe is not familiar with wind hail, like we are here in the Black Hills, so and I'm guilty of this too. In my head, every insurance agent in the country deals with the amount of wind and hail that we do here, and that's just not the case. But when you look at like a 2% wind hail deductible, in someone's head, 2% is a small number, right? It's only 2%, but it's 2% of whatever your dwelling amount is. You know, so if you have a $500,000 house, 2% of that is now your deductible. That's a pretty big, it's a pretty big pill to swallow.
That's basically not insurance, in my opinion, because you're paying half the price of the roof almost in cash.
In cash. And so you have a $20,000 claim for a new roof. Well, the first $10,000's on you. Here's a check for $10,000. You're like, but I have $20,000. So I just kind of advise people to beware of the percentage-based deductibles. And if you want it, that's fine, you know, but you have to understand what that 2% means.
I think the last time I relooked at our insurance, we were at $1,000 deductible and that went away. And I think we managed to get a 0.5% or a 1%, which isn't bad.
No, it's not bad. That's not bad. But yeah, insurance companies are doing whatever they can to minimize the risk, but also put some of the out-of-pocket onto the insured as well. You know, here we have a $3,500 wind hail deductible, which I don't think is unreasonable. I'd much rather have that than a 2%.
Yeah.
You know, at least out here in the hills. So.
Yeah, $3,500 is a lot better than $10,000.
Correct.
Plus.
And that's just the deductible for damage caused by wind and hail. You know, you can get $1,000, $1,500 deductible for everything else. You have a fire, it's a lower deductible. A lot of the optional endorsements that companies offer might have built-in deductibles for those. So it just, the biggest thing is to know what you're buying, right? And I think we see it all the time, and we've kind of been, the American public has kind of been brainwashed where all insurance is the same, so all you got to do is look at the bottom line, and cheapest is the best. And like, you need to know what you're getting for the money. There's some companies that won't cover cosmetic metal damage. So hail comes through and your gutters get destroyed, and your garage door and your window trim and your downspouts and roof vents. And that's,
or the metal roof that you have.
Or the metal roof. And then that's a tough conversation when that damage happens and you're like, hey, you know, by the way, our policy doesn't cover these things. And so you got to know and ask the right questions, and hopefully the agent is explaining what these things are, you know.
Especially on the wind hail side.
Yeah. You got to know what you have. You got to know what's covered, what's not covered. And then there's a lot of value in some of the optional endorsements in these different companies. A big one I would look at is backup of sewer and drain. Mm-hmm. That's a very expensive thing for mitigation to get that cleaned up. If that happens, you're probably looking at $10 to $12 a month to have that. You know what I mean? Yeah. So you got to kind of break that down and find what brings the most value. Instead of shopping just on price, it's more of a value.
And what's important to you, because some people like me, you know, when I lived in a wet basement. Right. That means a lot to me to not have water in my basement. Right. Thank you very much.
Right.
So that $10 to $12 to me is worth every penny.
Exactly. And understanding, you know, what you're getting is probably the biggest thing I see, especially new homeowners, like first-time homeowners. They don't know what they don't know. And unfortunately, my position, when I work with a realtor like you and a lender, I'm the necessary evil, right? Like, it's fun to go look at houses. Let's talk about granite countertops and stainless steel appliances all flipping day, man.
But we got to have that damn insurance.
And to have someone shoot it straight and explain things to you, I think is what we try to educate and not sell.
Right.
Is all it is here. So.
Great. Okay. Yeah. Great. Thank you very much. Any last minute tips that you might want to give to the listeners?
On the auto insurance side, a lot of companies are coming out with not so much like usage-based tracking, but like habit-based tracking. Okay. Look into that with your company. Okay. So here we have a program where we monitor 3 things: speed, hard braking, and cell phone use while driving. Okay.
I'm bad at 2 of those.
Guilty. Yeah. So, and I'm speaking just on my policy that I have here at my agency. Understood. I have this program in my pickup, my wife's vehicle, and my kids' vehicles. And what we are seeing for just my policy is over $1,000 in annual savings, because we're not speeding much,
Define speeding.
I mean, within reason.
Yeah, exactly.
Right?
Yeah.
But the biggest one is the cell phone use while driving. Yeah. And I mean, take a drive through Rapid City on those 2 ways, and just try to make eye contact with the people that are going by you the opposite way, and count how many of them are doing this while they're driving. And when you're being tracked, because I was bad, I was guilty. Yeah. My cell phone use while driving has gone way down because there's some incentive for me to do so. I can still use my hands-free. I can still make a phone call through my steering wheel. If you have hands-free, that's fine. But a lot of those programs are beneficial if you are a safe driver, and you follow the rules and you do the right thing. It's just kind of a way to get a little bit of savings for being a good risk.
Nice.
Yeah.
Nice.
Yeah.
Well, thanks very much, Brian. Appreciate
Absolutely.
you talking with me.
Yeah.
It was great.
Yeah. Thanks, man.
All right.
Well, there you have it, straight from the bearded man's mouth. If you like this video, make sure you watch this playlist and this video. Thanks so much for watching. Have an amazing day. And remember, love where you live.